Okay, so welcome back to Mod 3. So in this module, I'm going to be talking about the strategy and also the currency pairs that we trade at the particular times. So as you can see from the chart, the Crossfire strategy, the first strategy that we do is 6 a.m. And what we trade at 6 a.m. is Euro Australian dollar, Euro New Zealand dollar, the GBP, the pound, the British pound, Australian dollar, and the GBP New Zealand dollar. And the reason we trade it at this time is because we've got the closure or approaching the closure of the Asian market and the opening of the London and the European markets. And what we find is that there are certain price actions that are kind of interesting to us. And we always find that there is always price action in a certain direction at certain times. And 6 a.m. and also 1 p.m. are those certain times. So at 1 p.m. We're trading the Euro CAD, Canadian dollar, Euro Australian, the American pound, USD, GBP CAD and GBP USD, and we do that at 1 p.m. UK time as well. And the reason we do that is because we've got the open of the New York market, and that's when we get a lot of volatility. We also get the news, and we get some good price action in our favor. So that's what we're going to be doing. And one of the things that a reason why a lot of people find this beneficial is, UK time, people are, still in bed at 6 a.m. Most people are, work 9 to 5. But you can fit this routine in, this strategy in before you go to work. Okay, and usually because it's scalping, we can be in a trade maybe sometimes 10 minutes, sometimes an hour, it depends. Okay, but it is nice to be able to get in and out of a trade and know that you're done for the day. Okay, and whether we're trading with $50 or trading with $1 million, the strategy is always the same. The risk is always the same. Okay, so let me just show you what we do. All right, so what I've got a nice clean chart. This is Euro odd, okay, and this is the 15-minute time frame. And what I'm going to do, I'm going to show you why it's called Crossfire and how to put on those trend lines to give us an indication of where price may want to go. So what I do is I get this vertical line. Okay, I click on the vertical line, or you can click it from the side there as well. And I like to put this on the 1300 candle. Okay. So that's where it is. Okay, and what I tend to do as well, I'm quite a visual person, so I put lots of visuals on. So sometimes there may well be no need to put this on there, but it's up to you if you do. Then what we do, we put 2 trend lines on. Okay, and I always put these 2 trend lines on just before we start and put them on in readiness. Okay, so I'm going to change that one to green. And there's the candle that we're looking for. So what we do at 13:15, okay, because we're on the 15-minute time frame, that's when these trend lines get put on the chart. So what we're looking for here, we're looking for the higher high next to this chart. So as you can see, look, there's the body. Okay, let me just take this imbalance off so you can see that even better. So you've got the body here, okay, and you've got a wick. See that wick? And then there's a wick down to the bottom. You see the crosshairs? That's the wick. Okay, so we're going to look left. Okay, so we're going to look left, okay, and see where is the next highest high. Well, the higher high is here. Okay, so we get our trend line. Okay, the magnet tool's on, so that's going to snap. Okay, and it's going to go all the way to there. Okay, if we don't put the magnet tool on, we're kind of fumbling around trying to find it, but we put the magnet tool on and it just snaps to it. Nice and simple. And then what we're going to do, here's our candle, and we're going to put the trend line on top of the wick. Okay, so we're just going to bring it down there on top of the wick, and there we go. That's where it goes, just there. Okay, now with the red trend line, we're looking for the lower low. Okay, so where's the next low? Well, it's the one next to it. It's here. Okay, so we get the red trend line, put it on there, and then we bring this one up to the bottom of the green wick. Just there. Okay, just there. That's it. And what we're looking for with this strategy is we're looking for price. We see this price, look, we're looking for price to go above the green trend line for potential buys, and we're looking for price to come below the red trend line for potential sells. But of course there's lots of other quirks and foibles and things that we need to look at before we actually get into a trade. So there are a number of different indicators that I like to put on. So first thing is the straightforward Forex indicator. Okay, and what that does, that gives us lots of different information about the price, about what it may or may not potentially do. And what I always say about the indicators is that there are all stacks of probability. So the more probability stacks that we get in our favor, then the more inclined I am to go into a buy or a sell, okay, or indeed stay out. Okay, so that's what I'm looking at doing. So let's talk about the straightforward Forex indicator. So we're looking for, this is like a wave, okay, it gives us an indication of where the price is. Okay, so you got this wave down and you got this wave up. Okay, now we want to be if we're looking for a potential buy, we want to be in a wave up. Okay, so that's the first stack. The next thing is we've got these green dots. Okay, these green dots are called PSARs, or parabolic stop and reverse. Okay, so if the green dot is there when we're looking for a potential buy, then that's a good sign. Okay, if it was red, then the red would be above like this, and we wouldn't be interested in getting involved. Okay, that's it. The next thing we've got is, see all these little wave candles here? Okay, see how all these are green? Okay, ideally we want these to be green as well, and currently it's green. Okay, so again, we've got another stack in our favor to tell us that we're in for a potential buy. Now the next thing we've got on the chart, okay, if you look at this thing down here, we've got what's called a Wadar. Okay, and the Wadar gives us indications of volume and also where the trade may or may not go. And one of the things I'll always say about the Wadar or any of the indicators that you've got, no indicator is a predictor of the future. It's not going to tell you, I mean, there are some indicators out there that will predict or try and predict stuff, but I really wouldn't waste any time with those. What they're going to do is tell you what price is doing right now. Okay, and the more competent that you get with your trading, the more you will be able to differentiate what price is or isn't doing right now. Okay, as you get more confident. And what you can see here, okay, let me just bring this up so you can see it better. There you go. So what we've got this histogram. Okay, we've got these bars. Okay, buys and sells. Okay, and obviously the bigger the bar, okay, the stronger the move in that direction. Okay, so you can see here, look, little bars, really you don't want to be getting involved. And what you've got here is this blue zone, okay, and we call that the dead zone. Okay, and this is if the price is in the dead zone, we don't even want to be considering getting involved in the trade because there isn't enough volume in the market. Okay, so the next thing we've got is this line, which is called the explosion line. Okay, and what we want, again, as a stack, we want the explosion line to be moving away from this dead zone. So you can see from there, as we got some nice strength on the buys. And the other thing as well, when you get a darker color, that indicate another stack about more strength. Okay, so it goes lighter color, a little bit weaker, then darker, a bit stronger, and then a bit weaker, and so on. Okay, but what you've got here, you've got price in the dead zone. Okay, so we just stay out. Okay, we look at the charts, we look at the candles, we look at everything, we look at that, we go, no, there's not enough volume, it's probably going to, you know, change around. We're looking at a buy, then it comes for a sell, and then we don't know what's happening. It's because there's no volume in the market. And then suddenly it starts to move up. Okay, then it moves out of the dead zone and it's moving away. Okay, and that's when we go, okay, maybe we're looking at, you know, a potential buy here. Okay, by the same token, where we've got this sort of thing. Okay, if we go back a little bit more, there we go. So there's your sells. Okay, you've got the opposite thing happening for the sells. So it's moving away. Okay, it moved back there, so it, obviously the volume kind of ran out a little bit, but you've got some good volume there. Okay, and the explosion line is moving away from this dead zone. When you see the price starting to go back towards the dead zone, that's when you're going to be thinking, okay, maybe we should be getting out of this trade. Okay, so that's essentially the Wadar. But like I say, any indicator that you have on your chart will tell you what's happening right now. They're called lagging indicators. Okay, that this has happened, that's happened in the past, and it just confirms your decision. So if we apply that to the charts, we can see here, look, we had this nice big sell-off here all the way down, and this is quite a big move. If we look at our ruler, okay, from the top all the way to the bottom there, we've got 121 pip move, okay. Now it takes $10 million to move 1 pip, so you can see the amount of money or liquidity that was in the markets at that time, just in this time here, okay, which is you know, not a lot of time at all. But you can see there the Wadarata, okay, it started to go a darker red, and it was still moving towards the dead zone, okay, and then it started to move away from the dead zone, but it just gives you an additional confirmation about where the price may well go. And if you look at the wave, okay, this wave that we've got with the indicator, it was red all the way down. So sometimes when this stays red, okay, it can just give us an additional confirmation or a bit more confidence that we can stay in a trade for a bit longer, okay, and maybe instead of just taking our, you know, our normal take profit level, we can take additional profits by going take profit 2, 3, and so on, okay. So that's something else that we can look at. Now the other thing that we do as well is that we've got this indicator here, the 5, 13, and 62 clouds, okay, and they're essentially exponential moving averages. And what they do is they give us the average of the last number of candles. So if you look at this candle here, let's go to the start of it. So what we've got there, we've got the white moving average there. Okay, that's the 5 moving average. Okay, that's the average of the last 5 candles. We've got the 13 here, the yellow one. Okay, now the yellow 13 moving average, again, gives you the average of the last 13 candles. Then got the 62, which is here, the green one, and also this one, the 200 moving average. And depending on the background you've got, you can choose your own colours. But what I do, really simple, is when I was being taught this method, the guy had a white background, and he was talking about the different moving averages, and it kind of confused me because he was going, look, the black one. I go, no, mine's white. Okay, so this is what I did. Look, really, really simple and straightforward. I did that. No, I wrote it down. 5 white, 13 yellow. Okay, and just as really basic as that. Okay, and what you do is you just get used to it, and you get to know what they are. So what you'll find with the moving averages is that you'll find that price will see the moving averages as either support or resistance. Okay, so what I mean by that is, let's go back and have a look. Let's see what's going on here. So we've got this big move coming down. I've got this big sell-off. Okay, now if if price was up here and I was looking at this, I'd be looking at the green moving average thinking, well, price is going to probably bounce off that. Okay, and at any line that you've got on your chart, price will do one or two things. It will bounce or break, okay, because you've got support or resistance. So price came down, and you see how it's still in contact with this moving average, okay, and then it came back, okay. So the moving average was offering resistance, okay, to this candle, but because the candle is still through it, the wick is still touching it and it's still going through that line, okay, it's still offering resistance until it breaks through, okay. So here you've got this engulfing candle, it broke through, and that line is now offering support. So if you're looking at taking a potential trade, what you want to be doing is looking at these different areas to find out where price may well go to before it stops and reverses, okay, and that's really important. So you can see, look, that it kind of went sideways from there because of this area, okay, and then it pushed down. Where's the next area? The next area is the 200 moving average, okay. So it came to there. You can see this wick here, how it wicked just down to it, okay. It then pushed through, and then the 200 moving average then became support for the sell. So it then went further and further down, okay. And the more you do trading, one of the things I will say is that you can go on as many videos, watch as many videos as you want to, but really the only way to learn trading is to spend time on the charts, and this is why you need to get TradingView. Okay, you need to spend time on the charts, going through, and even if you don't trade with anything other than a demo account for as long as you can until you build confidence, then it's worth it, because you're going to build those skills and you're going to start to identify patterns. and that's really it when it comes to trading. You're looking at the charts, and when I first started trading, somebody would open the charts and they go, "Oh, look at that," and I'd go, "What are you looking at?" And it just reminds me of when I was doing a job offshore, and this rigger was trying to rig some gear to a really complicated platform, and it was really troublesome. Okay, it was a real problem, and he gave me a Polaroid picture, and he went, "Just look at that," and all I saw was cables and wires and dangly bits, and I went, "Oh, that's terrible," and just get back to him. It's like, I don't know what I'm looking at, mate, but I'm not going to admit it. And a lot of people do the same thing when it comes to trading. They look at the charts and they go, or it's like, well, I don't know what I'm looking at. Okay, so it's really important to just spend the time with the charts and really understand what you're actually looking at. Okay, so that's the clouds, and the other thing I use is pivots. Okay, so this is a free indicator that you can put on called pivots. And essentially, one thing I talk about on my sessions, as you've probably seen, are those areas of interest. So you go back, you look at previous price action, previous highs and lows, and see these blue lines. These are just pivots that I put on myself. But one thing you can do with the indicator, you can put these pivots on, and these are mathematically calculated to give you those areas of support and resistance. Okay, so as you can see, let's have a look. So this is the new session of the new day. Okay, price went up to this pivot line. Okay, and it came down, and you can look how price respected that pivot line. Okay, because it's an important line in trading when it comes to this strategy. Okay, so look, price kind of meandered around, then it pushed above it. Okay, then it went to, so this is your actual pivot. This is resistance 1. Okay, so it came up to there as well. All right, see how price respected it. It went back down, price came up, and again it touched it, it respected it. Okay, and then it came up to my areas of interest and did the same thing, it respected it there. Okay, and the more you, like I said, the more time you spend on the charts, the more you'll kind of understand what these pivot lines mean. And sometimes what I always talk about is clear air. Okay, so let's say price is up here. Okay, and we've got clear air between the price and the pivot. Okay, that is a nice indicator that I can look at a potential buy. Okay, so it's when you've got price down here and you've got all these moving averages and all these little hurdles and pitfalls. It's sometimes it can be, well, I'm just going to stay out because price looks like it needs to, there's too many things to get over. But you get into that clear air, and that's when you can start to take those really good trades. And one of the things I always say is that you don't just want to be taking any trades, you want to be taking really good trades. Okay, and the trades that you've got confidence in. So a lot of the time as traders, we're kind of sat on our hands thinking we need to get in, but it's not ready yet, so I'm going to wait. Okay, so you've got to be patient when you're doing trading. Okay, so that essentially is it. Okay, when it comes to setting up your charts on TradingView with the Crossfire trend lines and also the indicators. So the straightforward Forex indicator, the 5, 13 and 62 clouds, and also the pivot. Okay, so once you get those on your chart, have a look at them, have a play, and one of the biggest things I'll say is have a play in putting these trend lines on, and do it and be repetitive, and also do some back testing. What I mean by that is that you go back in time. So I would go back to, so this is 1 p.m. today, I would go back to 1 p.m. yesterday and put the charts on, put the lines on in the same way and see what price did, and then go back to the day before and do the same, and the day before and do the same. And I tell you what, you do that 5, 10, 15, 20 times and you're going to see a pattern of commonality, and that's when you really start to understand what the price is doing, what the pairs are doing, and to really understand the actual strategy. Okay, any questions that you've got, just put a comment below. Again, if you haven't yet subscribed, hit that subscribe button, and I will see you on the next module. Talk soon.